Hey everyone, welcome to my channel Study with Amit Singh. In today's video, we are diving into most advanced and trending interview questions in the KYC AML sanction screening domain. Whether you are just starting out or preparing for your next big interview, this video packed with value. So stay tuned till the end. In this video, we are going to discuss advanced trending interview questions for the KYC, AML, and sanction screening. Let's start with some general interview questions that often come up across different roles like PEP screening analyst, KYC analyst, transaction monitoring analyst. So here are some expected questions like what are your roles and responsibilities? So as PEP screening, sanction screening analyst, here you need to answer like I am responsible for screening the customer name against the sanction and PEP watch list provided by the global sanctioning bodies, United Nations, European Union, OFAC, HMT, Interpol, and etc. I am primarily involved in processing the alert as false positive for customers who are identified to be mismatched with match party detail and escalate for further review to next level if customer and match party detail match with each other. Time taken to review each alert is 10 minutes and case management tool used is Actimize. Okay, now next question is what are your roles and responsibilities as KYC analyst? So responsible for reviewing and verifying customer KYC information on new account document and performing appropriate client profiling by understanding the customer and the associated parties like UBOs and key signatories like CEO, CFO, COO, and documenting the findings along with the performing negative media screening to make sure that there is no relevant AML related negative news. Follow up with the customer if additional document is required for completion of KYC review. Time taken to review each KYC profile is 90 minutes and case management tool is used is Finergo. Next question. What are your roles and responsibility as sanction screening, transaction monitoring analyst? So responsible for reviewing transaction to identify any money laundering or terrorist financing red flag and rapidly disposing the alerts in cases with no identified during the investigation or escalating the case or alert which requires further review by the next level of team. I am responsible for identifying the transaction pattern and mitigate the money laundering and terrorist financing risk with clear and concise narrative writing on the findings during the investigation. Time taken to review each cases is 90 minutes and case management tool is used as Actimize. Next question. What is FATCA CRS? FATCA or a Foreign Tax Compliance Act is a US federal law enacted in 2010 as part of the Hire Act. It requires foreign financial institutions to identify and report information about the financial account held by US person, including individuals and entities, to the US Internal Revenue Services. Now, the CRS or the Common Reporting Standard is a global standard developed by OECD, Organization of Economic Cooperation and Development, in 2014. It requires financial institutions in participating countries to identify and report financing account information of individuals and entities who are tax resident in other countries. So, FATCA is a US centric while CRS is a global and cooperative. Basically, FATCA has a purpose to identify those individuals who park their fund out of US jurisdiction to avoid tax obligation. And CRS has a purpose to identify and report the financial account information of individuals and entities who are tax resident in other countries to avoid tax obligations. What is the structuring and smurfing? So, structuring is a process to breaking up a large financial transaction into smaller amount to avoid triggering regulatory reporting threshold. For example, 10,000 USD is threshold limit and money launderer deposit 9,900 USD to avoid triggering regulatory reporting threshold. Smurfing is a specific type of structuring where multiple individuals known as smurfs are used to make these smaller transactions on behalf of someone else. Okay, so these are the difference between structuring and smurfing, and it is very important question. Now, what is USA Patriot Act? USA Patriot Act passed in 2001 after the 9/11 attack. The Patriot Act expanded the power of US law enforcement agencies to combat terrorism and financial crimes. BSA Act BSA Act, Bank Secrecy Act, introduced in 1970. The Bank Secrecy Act is one of the first AML laws in the US. It requires financial institutions to maintain record of cash purchase of negotiable instruments, file report of cash transactions over 10,000 USDs, and submit suspicious activity report. FATF FATF, a Financial Action Task Force founded in 1989. The FATF is an intergovernmental body that set international standards to combat money laundering, terrorist financing, and other financial threats. It published 49 recommendations for combating money laundering and terrorist financing. Now, who act as a FIU in US, UK, and Australia? So for FIU in US is FinCEN, NCA in UK, and Austrac in Australia. Who are gatekeepers? Gatekeeper in money laundering refers to the professions such as lawyer, notaries, accountant, auditor, as they are considered to have experience and expertise in managing the illegal fund and hence acting as a gatekeeper by helping the money launderers. What is correspondent banking and risk faced by the correspondent banking? So, correspondent banking is a relationship where one bank called correspondent provides service to domestic bank, often in a different country, known as respondent bank. So, this service typically includes processing the international payment, fund transfer, currency exchange, trade finance. Risk involved in correspondent banking is it does not have full visibility into underlying the parties involved in transaction. This can obscure the true origin and beneficiary, and correspondent banking is often used to connect with the bank in sanction or high risk countries, increasing the risk of exposure to terrorist financing, money laundering, and proliferation financing. What is MSB and risk with MSB? MSB, a money service business, is a non-bank financial institution that provide money transfer or currency related service includes currency exchange, forex dealers, remittance or money transfer service like Western Union, issuing or redeeming money orders or traveler's check, prepaid card providers, crypto exchange in some jurisdictions. The risks involved in MSB are high cash volume involvement, lack of customer verification, cross-border remittance, etc. Now, difference between private, public, and government companies. So, private company, these are owned by private individuals or a group, and their shares are not publicly traded. Where public company, these are listed on the stock exchange and their share can be bought by general public like Reliance, Infosys. Government companies or PSUs, these are the majority owned by the government usually more than 51% shareholding. Now, before going further, are you looking for a break into the KYC ML domain but don't know where to start? I am providing training. If you are looking for a training to crack an interview, then you can join my training program. It is up for 1 month, 20 hours training. Class will be held on Saturday, Sunday, 12 to 2 p.m. This training starts on first week of every month. In this training, you will learn basics of KYC and AML, process workflow for end-to-end KYCs and different attributes, and transaction monitoring, PEP screening, sanction screening, all with case studies. We will be discussing a trending interview question and we will guide you to prepare a resume related to the KYC AML profile so that you will be getting more calls related to this profile only. You can connect with me on a mention email ID in description box for the more detail. All right, now let's discuss more, common interview questions, the KYC interview questions, which includes what is trust and who are the key parties involved. A trust is a legal arrangement where one party holds asset on behalf of another. Trusts are often used to estate planning, asset protection, and charitable purpose. Key parties in a trust, which is settler, who creates the trust and contribute the asset, trustee, who manages the trust and its asset beneficiaries, individual or entities who benefit the trust from the protector. Okay, and sorry, benefit from the trust. Protector oversees trustees and ensure the terms are followed. All right. Now, what is KYC and what are its key elements? So, KYC, Know Your Customer, is a critical process used by financial institutions and regulated entities to verify the identity of their customer and assess potential risk of illegal intentions such as money laundering, terrorist financing, or fraud. Key element of KYC, which is customer identification program, where we need to verify the customer identity using valid document. Customer due diligence, understanding the customer profile, nature of business, source of fund, and expected activity. Enhanced due diligence, applied to high risk customer, requiring deeper verification and monitoring. Ongoing monitoring, reviewing customers' activity regularly to detect unusual behavior or red flags. What is EDD and why bank perform EDD? EDD means enhanced due diligence, which means whenever we are able to identify risk associated with the customer profile, we need to do some extra check on customer. Bank perform this operation to assess the identified risk and exposure of money laundering and terrorist financing. Now, what do you understand by SPV? SPV, Special Purpose Vehicle. It is this entity is created by a parent company for a special purpose, like holding an asset, raising a capital, managing a specific project like real estate business or something like that, without exposing the parent company's balance sheet directly to the associated risk. So, what is the beneficial owner and why it is important in CDD? So, beneficial owner refers to the natural person or entity who ultimately owns or controls a customer or the person whose behalf a transaction is conducted. Even if the customer is hidden behind the layer of companies or trust, it helps to identify individuals who may be trying to hide behind the corporate structure for illegal activities like money laundering, terrorist financing, or tax evasion. Regulatory framework like FATF, FinCEN, AU, and AMLD, etc., requires institutions to know the true owners or to assess their real risk. Now, what are common high risk factors that requires EDD, enhanced due diligence? Politically exposed person due to risk or bribery or corruption, customer from high risk jurisdiction, sanction embargoed or FATF listed countries, complex ownership structure, multiple layer of entities, trust, making tracing makes tracing real owner harder, high value or unusual transactions, large cash deposits, international wire transfer to risky region, shell company or SPVs, entities with no physical presence or real business operations, non-resident customers or offshore accounts, higher difficulties in verification, industries with higher risk, casinos, arms dealer, uh, real estate, money service business, negative media or adverse information, publicly available evidence of criminal activities. Now, now let's discuss for common KYC questions, KYC interview questions, which includes what do you understand by sanctions? So, sanction are legal restriction which is imposed by government, international bodies like United Nations, European Nation, or regulators to achieve foreign policies on national security goals. Now, what are the type of sanctions? So there are some type of sanctions which is comprehensive sanctions include full trade and economic restriction against an entire country or targeted country. Sanction, uh, smart sanction, targeted sanction, or smart sanction is focused on specific individual, companies, or vessel or organization. Financial sanctions, restriction on financial transactions like freezing assets, blocking bank accounts, banning access to the financial system. Trade sanction, ban or limit the trade in goods, technologies, or service. Arms embargoes, dual use goods, oil restrictions. Travel sanction, travel ban, banning individual from entering or transitioning through countries. Sectoral sanctions target specific sectors of a country's economy like energy, finance, defense. Secondary sanctions punish third parties like companies from other countries for doing business with sanctioned entities. What role do sanctions play in EDD process? For the risk identification, a positive match immediately escalates the case to high risk or often requires escalation to compliance legal team. Screening and monitoring, EDD requires enhanced sanction screening, not just at onboarding, but ongoing monitoring during the business relationship, strengthening the controls. For higher risk countries or customers, bank might apply stricter transaction controls, manual payment approval, or block transaction involving the sanctioned entities. Document and reporting. If a customer is flagged under the sanction institution, must document the due diligence efforts, file regulatory reports like OFAC, voluntary self-disclosure, or submit a suspicious activity report SAR. Now, what is the name screening in context of KYC and AML? So, name screening in a KYC AML compliance means checking a customer or related party's name and detail against the specific data to detect risk with LexisNexis, WorldCheck, or SDN list. The sanction exposure, politically exposed person, PEP, adverse media negative watch list. So these are the other database which we consider to match the customer's name. Now, what risk do PEP pose exposed to financial institution. So corruption risk. PEP, due to their political exposition, may be involved in bribery, embezzlement, or misuse of public funds. Reputation risk. If a financial institution is found to be banking or corrupt PEP, it can suffer severe reputational damage even if no laws were technically broken. Regulatory and legal risk. Failure to detect and manage PEP risk can result in massive fine, penalties, or even license revocation. Sanction risk. Continuing to deal with them can lead to the serious sanction violation. Money laundering risk. PEP may attempt to launder illicit proceeds through complex financial structure, shell companies, or offshore accounts. Next slide. Interview question for transaction monitoring. So, what do you understand by transaction monitoring? So, transaction monitoring is a process where financial institutions track and review the customer transaction in real time or after processing to detect suspicious or unusual activity that could indicate money laundering, fraud, terrorism financing, or other financial crimes. Type of scenarios or typologies. Structuring, breaking transaction into a small amount to evade reporting, and 9,900 cash deposit over multiple days. So rapid movement of fund, for example, 10,000 USD deposit and same day it got withdrawal. Transaction happen in high risk jurisdiction. So these are some common scenarios on typology I have already discussed in one of my videos. So you can refer transaction monitoring video which I have already uploaded for more information on this topic. What is SAR, STR and CTR? So suspicious activity report, it refers to any suspicious activity in account including transactions, cash transactions, currency exchange or any other suspicious activity which happens in account. Now, suspicious transaction report refers to only the customer's transactions. Now, currency transaction report to report a large cash transaction above the set threshold limit. Now, what do you understand by BSA Act? We have already discussed the same thing. BSA Act refers to the Bank Secrecy Act, officially known as Currency or Foreign Transaction Reporting Act of 1970. BSA requires financial institutions in the US to help government agencies detect and prevent money laundering. It mandates record keeping, reporting of large cash transaction and reporting suspicious activity that might signal financial crimes like fraud, money laundering or terrorist financing. How do we write SAR? So there is four steps. First, we need to identify the unusual or suspicious transaction or activity through automated system or human monitoring. Second, internal procedure where transaction statement, amount date, client name, account number needs to be given. Then documentation. So gather necessary information like transaction detail, individual involved, dates, or any other supporting evidence. SAR filing. Complete the suspicious activity report form with comprehensive detail and submit it to appropriate authority within the specified time frame, which is 15 to 30 days. Now, I am going to share some other interview questions for work process related. So, here are some questions. So, related with the KYC, what will you do when you identify any red flag in a customer's profile? How do you mitigate the risk and what step you follow for it? Please explain your process workflow step by step. What is your daily target and what kind of error category you receive in KYC, and what is the error passing percentage? How do you drill down the ownership structure and how do you calculate the share? So these are some very common question which is asked in interview if when they comes to the process related questions, your work experience related questions. Now for the transaction monitoring, here are some. What is your daily target and what kind of screening you do? Can you walk through a case scenario? Take any example. What is your error categorization and what is the error passing percentage? What type of payment screening you do and how do you investigate the alert? So this is for sanction screening. Then questions for real-time interview questions, real-time process workflow interview question for transaction monitoring is what is your daily target and what kind of screening you do? Can you walk through a case scenario? Discuss any challenging scenario and how did you tackle it? What is your error categorization? What is error passing percentage? What type payment screening you do and how do you investigate the alert? How do we narrate investigation writing step by step? Please explain. Okay. So here are these are some important questions which usually you will encounter when you go for the interview. Please prepare these questions, and the people those who don't have any experience and in KYC AML and looking for the answer of these questions, please welcome to join my course where I will be guiding you with the real time work experience and process related questions, and I will be guiding you with the basics. So if you are looking for the answer of this question, you may join my course where you will gain extensive knowledge on process workflow for all KYC AML operations. You may connect with me with mention email ID amitsinghvishain112@gmail.com. If you like the content, then please like, subscribe, and share my channel. Thank you.